Now, if you've been on the sidelines, it could be a question mark here. Is this the time to get into the tech trade? So joining me to discuss exactly that, we've got Burns McKinney, NFJ Investment Group Managing Director and Senior Portfolio Manager. Burns, it's great to have you on. Thanks for being here. So listen, we had this pretty huge sell-off in tech, the worst of the year, at least when you look at the major indices. If I'm an investor listening to this wealth program right now, should I be using this as an opportunity to maybe go into my 401k, move some things around, get in on the NASDAQ when it's a little bit cheaper?
For some of the names, there definitely is going to be an opportunity to buy the dips. That said, this really could be the start of a longer and more enduring rotation. The two major factors that have really kicked this off, one of which has just simply been, we've had three below expected inflation prints in a row, which really cemented the idea that the Fed is probably going to have the opportunity to cut rates in September, which that tends to be a good thing as far as expanding breadth into some of the things that have lost over the last couple of years, things like value stocks, like small caps, some of the names like financials and areas. And then the other factor really over the past week has just been that earnings have come in, the expectations in a lot of these AI geared tech stocks have just gotten to be so high. You don't just have to beat earnings, you have to beat the whisper numbers. And that's something that could continue. It's really, what I'm describing is that the crux of the benefit of value investing. Value stocks are the types of names for which low expectations are built in versus a lot of these mega cap techs have extremely high expectations built in. And it's hard to meet them. I sort of say, if you have two students, an A+ student who comes home with an A-, or you have a C student that comes home with a B, which kid do you think is getting taken out for ice cream for beating expectations? I'd say it's probably the latter, and that's kind of what we're seeing in the market right now.
That's my favorite markets explanation I've ever had, Burns. So thank you for giving me that. I'm definitely going to steal that for future stories. But I do want to get a little bit more into the details of this for investors listening, because I get it. We've got to own quality. We got to be looking for that value play. But that's a little bit easier said than done. What is your rubric for sussing out value plays? And is it a scenario where individuals should be owning companies specifically, or a broader index that encapsulates several of those names? What do you think?
Well, for one, we always say, investors that don't have the time and the homework to really put a lot of time into really finding a good active manager, then buying some of the indices is certainly a low cost way of doing it. But that said, when you do have sharp market turns, there is some benefit to making sure you have someone at the wheel flying the plane and buying one of these active, value-oriented funds. As far as strategies to buy into that, we look for names that are producing a lot of free cash flow. One way to really kind of force yourself into that is buying companies that are paying and raising dividends, because obviously it requires a lot of cash to pay a dividend. But when a company makes the decision to raise their dividend, that really speaks more than anything to the management's confidence in the business. So that's one way to really get into some of the value names that we do expect the markets to rotate into. And of course, the markets, you have just really the benefit of reversion to the mean. Value stocks have lagged growth stocks in the U.S. for over a decade now. And, they usually trade a little bit of a discount, but that discount has gotten to be 1 or 2 standard deviations wider than usual. So, this may not be the major turn, but that said, we do believe it's a good time to maybe rotate into some of the more value-oriented areas of the market.
Burns, I'm going to end by asking you to do a little bit of a rapid fire stock pick game with me here. So I know that your favorite stock picks, you've got Honeywell, Rollins, and Crown Castle. Can you give me one sentence on each?
Sure. Rollins, basically are better known as Orkin. They're, they have a duopoly in the pest control space and a lot of recurring earnings. Crown Castle, it's a REIT that owns cell towers. And so that's just a way of playing the secular trends and rising demand for digital content. And Honeywell, as far as industrial conglomerates, they also benefit from long-term trends like automation or energy efficiency, and all of which can be done at a discount to their historical multiples.
All right, Burns, we're going to have to leave it there. Thank you so much for joining us and for giving us those picks. We appreciate it. That was Burns McKinney, NFJ Investment Group's Managing Director and SPM as well.